We want to continue this markets conversation with a guest we haven't seen in a while. Abby Joseph Cohen is a former partner and chief U.S. strategist at Goldman Sachs, now a professor at Columbia Business School. And Abby, thank you for coming in today.
Good morning.
We look to you for big calls on a lot of different issues, and the way Mike just set things up, I think, is a pretty great way for starting. We are looking at new highs. You could say valuations are stretched, but then again, there's not a lot of volatility that leads into this. What do you see when you look at the landscape?
Well, you know, Becky, it's an interesting time because we've had market strategists just recently lift their targets again, not just in the United States, but also in China. And in some ways, they're kind of looking at the momentum. And I always, as you know, like to look at midterm, long-term kind of issues. And from my perspective, I think we're now in a trading range. And there are a few reasons for it. You know, I look at the fundamentals, which are not bad. I think the U.S. economy is in very good shape. Corporate profits this year are in good shape. But a lot of that good news is already baked into the market. I also take a look at the consensus forecasts that are being used for S&P earnings for next year. And many of them are expecting additional earnings growth of 10 to 12% from the strategists, even more than that from the analysts. That represents an acceleration from this year, even though the likelihood is that the U.S. GDP will be growing more slowly next year than this year. We're seeing roughly GDP growth, real GDP growth now of about 3%. It'll probably ease off a little bit to about 2.5%, certainly not a recession. But it's kind of hard to argue that profits are going to accelerate dramatically. And then, of course, there's the valuation question. Valuation is already pricing in some very good news, and that's for the overall market. And of course, there are some sectors that have some issues. My real concern, however, has to do with some of the geopolitical things that we look at. And I start with the U.S. election. Historically, if you go back many cycles, you see that the U.S. stock market does pretty well after a major election. There's a sigh of relief, and also most people feel that their candidate has won. This year, I'm not convinced it's going to be a sigh of relief rally. In fact, if anything, I'm quite concerned about what happens if there is agitation of any sort following the election because of uncertainty about results and so on. So that, to me, is a concern.
Because it's so close, because there have been questions raised about the potential for tampering.
Exactly.
That half the country is going to feel like they got robbed or ripped off.
And there will be candidates out there, not just at the national level, but state and local level, who are already talking about tampering, even though there's no evidence of it. And that's something that concerns me. We also, of course, need to have thoughtful conversations about policy going forward. Either way, we're going to be having a new president with different priorities. And I do very much worry about some of the policy changes that we could be looking at. Some of the ones that have been discussed by some of the candidates look fine to me. Others are quite worrisome.
Which one's concerning?
Well, you've been running a Chiron this morning talking about the forecast, the estimate that's been done by an outside group saying that the Trump plans would add $7.5 trillion to the budget deficit. That's a pretty significant number. I haven't done the numbers myself. I think it's very hard to do so until you actually see legislation and so on. But one of the things that I'm quite concerned about has to do with tariffs. Tariffs are not paid from the country of origin. They're paid ultimately by U.S. consumers. And there's one other thing that us policy wonks are focused on that, to me, is very, very troubling in terms of ultimate economic activity. And that has to do with so-called Schedule F plans from the Trump administration. This is something that was put in place at the end of the first Trump administration, something that's discussed in Project 2025. I know that President Trump has disavowed Project 2025, but there are so many of his people behind it. I think we have to look at it seriously. And what does it do? Schedule F basically says, okay, we have 10,000 political appointees in the federal government. What they will do is reclassify an additional 40,000 jobs to become political appointees. And who are filling those 40,000 jobs now? They're basically the subject matter experts, the people who make things run. You know, the Congress will do some legislation, but somebody in an agency has to decide how that will be implemented, number one. And number two, you want people who are scientists, you want people who are experts in whatever category it is, basically making those decisions, not an additional, in my view, 40,000 political appointees.
Valid concerns to be thinking around these things. There are people who also look at the Harris campaign and say, if you start taxing unrealized gains, what will that mean in terms of market potential sales down the road? How do you figure that out? All these things are, again, talked about on the campaign trails. It's hard to go in and dig into details on these things, but I have heard people concerned and say that the market might sell off if that happens.
That would be a concern, and you said it in just the right way. How do you figure this out? I have never figured out how you can actually compute what those untaxed returns would be, those unrealized gains. And so this seems to me to be one of those proposals that just doesn't really
You don't care about corporate rates? You think 28's okay?
The corporate tax rate, Joe, as you well know and has been discussed here many times, has been that the statutory rate is not the effective tax rate. The current effective tax rate is probably on the order of 18%.
So it's low enough, in your view?
It's one of the lowest in the developed economies, and we have seen fabulous corporate profits, which have been benefiting from this low tax rate. Will the corporate tax rate go up substantially under a Harris administration? I don't know. I'm not connected
capital
to
gains.
The capital gains tax rate is something that is also obviously being discussed, but the thing that actually collects more money has to do with growth, which historically has been the way the U.S. economy has grown and has the federal
then we'd have to talk. Then we'd have to talk regulations.
That's right.
How about the filibuster?
Let me just finish the point. The federal revenues have typically grown best in the United States when the economy has grown. And having read the documents from both campaigns, what the Harris campaign includes are many different proposals to grow the economy. It's not just housing, but it's also credits for manufacturing and a variety of other things that would get the economy moving in a stronger way.